Welcome back to my channel for another video. So this is the easiest instrument to trade, alright, especially if you're a beginner. Okay, this is ideal if you're new to the stock market. Okay, trade futures. Okay, so in this instance what we're looking at is the Dow Jones. So the Dow Jones average. Okay, so that's basically a reflection of the overall stock market on the New York Stock Exchange. It's made up of like the top 30 profitable companies in the US. Right, so it's a reflection of the overall stock market. For this is perfect. If you're new to the stock market, this is absolutely perfect because the pre-market analysis is not as stringent as what it would be if you're going to have to trade a stock and then you've got to look at the financials, etc, etc. You've got to look at where the company was, where it's going to go, investor sentiment, all of that kind of pre-market analysis. So, you know, with futures, so for example, this morning, this was a trade on the European Open. So I was trading the Dow Jones on the European Open and I didn't need any pre-market analysis. I didn't need it. The only thing I'm looking at is where it was on Friday. It's a continuation from Friday. Okay, it's a continuation from Friday, but more importantly than that, all my trades are based on price action and patterns. They're based on these patterns that I've identified over a long period of time. So you don't need to do your pre-market analysis on futures the same way as you do in stocks. So it's ideal if you're new to the stock market. This is absolutely perfect for you. Okay, so before we crack on, guys, make sure that you smash that like button and make sure that you subscribe to my channel for more videos like this. So as always, guys, hope you enjoy this week's video. Okay, so I've entered with 136 contracts on the Dow Jones and I've entered at 28,518. So as you can see, it has pulled back a little bit further. However, I'm quite happy to hold here because, you know, as I've said in previous videos, all my trades are based on price action and all my trades are based on patterns that I've identified over a period of time. So I'm quite happy to hold this here now because I know the pattern that's going to form. I know the pattern that's got to form because history repeats itself time and time again. So I'm quite happy to hold this. And there you see straight away there I'm in the green. Now, this is quite volatile at the moment, and that's good. It's good because I'm on the right side of volatile here. If it was the opposite way around, I'd be a little bit concerned, but I'm not concerned here at all now because I know the pattern that's going to play out. So I'm going to actually expect, I think I might get a decent return out of this now, just based on the price action, based on the volatility and the size of that green candle as well. It's a big green candle. So it's all very positive at the moment. Obviously I'm long and all the momentum is on the bullish side now at the moment. So this is a classic example of, you know, why I just trade two patterns, and that's all I do. I trade two patterns in the stock market and that's it. And this for me is an easy one, i.e. the Dow Jones. So this is me trading the Dow Jones on the European Open at 8 AM London time. So I entered my trade probably about 8 minutes past 8. I never enter straight away because the initial first 5 minutes is just too volatile and it's quite erratic and it doesn't give you a true feel of where the price is actually going. So you've got to allow it to settle down a little bit. It's like opening up, you know, a can of Coca-Cola or something that's been shaken. You know, it doesn't know where it's going to go. It's just going to spill everywhere. So you've got to let it cool down a little bit. Just let it relax. And then it finds its ground and it finds where it's going to go. So I'm quite happy to hold this now. Quite happy to hold this nice little consolidation period there. Look at that. And that's good for me. That's good news for me because I can see where the consolidation period is leading to. Alright, so the consolidation period for me is leading to more bullish momentum. Alright, so quite happy to hold this now, and I think I'm gonna do alright here. I think I'll do alright here because I can see exactly where this is going. And look at the size of that green candle again. It's a beautiful big green candle and there's some serious bullish momentum here. There's a lot of buyers in here at the moment and there's pretty good volume. I can just tell by the way the candles are behaving that there's some really good volume here on the European market this morning. Sometimes Monday mornings are like that. You know what I mean? Fridays can be slow, but sometimes on futures, you know, you get a really good bit of volume in the morning. So quite happy to hold this.
and there I'm up just over £100 already, for 10 minutes work or whatever it is. But we'll see. Hopefully I can get a little bit more out of this. If I can get another 100 out of it, I'll be happy. I'll be quite happy to take £200 for half an hour's work. You know what I mean? Be quite happy just to take that. And that's the beauty of trading futures. The pre-market analysis, is not as stringent when you're trading futures, because it's just a continuation from basically Friday night. So I'm quite happy to hold this again. And sometimes I might put a stop loss in to secure a profit, but on this occasion, because of the way it's actually performing, I'm actually not going to do that, because I actually think I can get more out of this, and I only put a stop loss in a green position if I feel as though the trade could possibly start to go against me, so it could start to reverse back down. But I don't think that this is going to happen yet on this, so I'm going to continue to hold this. And this is coming with experience. It comes with experience, because I just know from the way that this is behaving that I can hold it longer. You know what I mean? And that's what it's all about. That's what it comes down to. Eventually you get to read these things. You get to read them. And it is starting to slow down a little bit. And as soon as I say that, a lovely little spike there again. But I might not get too much more out of this now. Like I said, if I can get 200, I'd be happy. But I'm not holding for 200. I'm only holding because I can see the characteristics that are getting played out. So I'm not holding for the £200, because that's dangerous. If I'm waiting for £200, I could end up losing. Alright, that's not the reason that I'm holding here. I'm holding because of the characteristics that are being displayed in front of me. So, but I will probably just manually take this out now in a minute, I think. I do think that I'm gonna start hitting resistance pretty soon. Could be another couple of little spikes, and then I think it's gonna reverse back down. But as I said, that's why I've not put a stop loss in here, just because of the way this is performing. I know when to put a stop loss in, and I know when to just manually liquidate a position. So look at that, another lovely little spike. I think I might get another couple of little spikes, and then it'll probably start to reverse back down, because what goes up must come down. It's as simple as that. What goes up must come down. Okay, so I think it's starting to run out of steam now. It is starting to run out of steam. It's starting to slow down. And I think I'm just gonna take that. I've got to take that, don't I? Give me another little spike, and then I'll just get out 270. I'll be happy with that. Another little spike, go on. Another little spike and I'm out. I think it's due one more little spike and then I'm done. Go on, there we go. Right, and then I'm done.
Okay, so there you have it, almost £300 for about 15 minutes work. Okay, so nearly £300, so probably about $320, $330, something like that. If you're doing this 3 times a day, you can easily make $1,000 a day, easily. But you've got to trade these 3 different times. But more importantly than that, if you're new to the stock market, right? If you're new to the stock market, this is perfect for you. It's absolutely perfect, because it's not messing your head up with having to do pre-market analysis and having to look at financial reports. You can come back to that. So this is a very easy way to start, and instead of having too much complications and it becoming far too complex and it overwhelms you, you can just basically bring it back and just look at the overall market sentiment, so you don't have to go into the actual financials. So as usual guys, if you haven't already done so, make sure that you smash that like button and make sure that you subscribe to my channel for more videos like this. So again, next week we keep going guys, we keep going again. And I always say, I do these videos for you guys because people used to do them for me, and they're still doing them, and I still watch them. Alright, so I know that people like to see these videos, and I know that it helps you out there, because there's still a couple of people that I still watch, and I enjoy when you bring these videos out as well. Alright guys, so hope you have a green week.